Hello traders, and welcome to another video review. Today is Tuesday, June 13th, 2023. Let's take a look to find out what is going on the Forex economic calendar. Yesterday the day was very poor in important data releases. Today the situation is completely different. We have plenty of the data that are very important, and one of them is average earning index, bonus and climate count change from the UK. Average earnings index jumped from 6.1% to 6.5%, beats the expectations of 6.1%. Climate count change dropped minus 13,000, which is a complete surprise because market participants expected an increase for over 21,000. So we will definitely take a look at the British pound later on. German economic sentiment is scheduled for a release at 11 o'clock, and this time the economic sentiment should deteriorate even further from minus 10.7 to minus 12.7, so it's 2 points. Core CPI data from US is scheduled for release at 2:30, and the market participants expect the CPI to stay at this very same level, 0.4%. At 4 o'clock p.m. We have the Bank of England Governor Bailey to give us a speech. So please stay focused during this speech, and especially keep an eye on the British pound related pairs. So what do we have here? Is a very nice day for the traders. There are some very important data scheduled for release. So let's just jump to the British pound to see how the British pound hard cable reacted on the very important data release. So the British pound, this is 4-hour chart, is looking quite nice. For the moment. What I mean is that we apparently have this movement to the upside. Yesterday, as you can see, we tested the lower levels of the zone. We moved towards 1.2486, but it looks like the market is trying to bounce back on towards the 1.2598 level. So this is of course the last, for now, technical resistance ahead of this level here, the big swing resistance, 1.2678. So it will be a good idea to keep an eye on the current developments on the British pound. The reaction is positive. As you can see, we went down from the extremely overbought market conditions on the RSI, tested the level of 50, and then bounced a little bit. The low was 46 points. However, it's not that bad at all if we take into the consideration the situation on the British pound. So please stay focused, stay vigilant, because the bulls might be striking back. Basically, what do we have here for the bulls? Let me just, maybe not the trend line, but let me just make classical parallel channel. All right, from the low of the 25th of the May. If we move our trend line here and then jump right back on somewhere, let's say here, you can see this market is moving inside of the channel, and this is like a corrective channel. Let's make it a different color. Sorry for doing this, but I need to, there you go, I need to do it in a different color so we can see what is going on here much more clear. And now the situation is a little bit better. So the bulls are trying to move. They're moving towards to move to the upside. They are moving towards the extremely overbought conditions. That they move down, they back again to the extremely overbought conditions, and straight on. But you can see the consequence of the lower highs. I mean, the highs are higher. Yeah, this is the higher high, this is the higher high, and the lows are higher as well. Even this low is higher than this one, and this one. So bulls are still in charge of this market. They are approaching the level of the technical resistance, right, the swing high. So we should expect this market to break higher first above this swing high and then up towards the red line. Okay, that was the British pound. We still have data from the US, so let's find out what's going on the S&P 500. And there is a very interesting situation here, because we have a breakout to the upside. Look, I'm zooming out, and it looks like the uptrend is being continued. So what is going on here in the what is going on the short term? Where is S&P 500 heading to? So short-term technical support 4,322. The other one, technical support 4,299. Any other technical support? 4,260. So this sort of a movement is very typical for the bullish markets. However, plenty of kind of a candlestick pattern that might inform us about the possibility of the trend reversal. They were all ignored, and the market made new high. Bulls are very strong, and you can see it here. You can see it here because we hit again extremely overbought market conditions on the 4-hour chart. We are trading above 50, 100 moving average. Another situation when the very hot market is extending the gains to the upside. So right now, basically what we can count is the movement to the downside in form of the price range. So the last price range, -3, fine, -3%. The other price range, of the correction, of course, -2.6. Right, the other price range, that would be even lower, -1.68. This one is definitely even lower. So it looks like the corrections are getting smaller, and the movement to the upside from swing low to swing high are getting bigger, which is why the market of the S&P 500 will be moving higher for quite some time now. Okay, so the outlook remains bullish unless this support to 4,260 is clearly violated. So that's the S&P 500. We still have one more market to talk about. Let's take a look at the crude oil. The crude oil market is under the bearish pressure. We can see it very clearly because we are approaching the level of 67.04. So this is the local technical support. It was violated because the low was 66.81. However, there is no daily, no 4-hour close below this level, but it's very clear that the market is under the bearish pressure. If we break below this level, then the next target is the lows at the May 4, 2023, located at 63.69. We are trading below the 50 and 100 periods moving average into the extremely oversold market conditions. So only if the bulls break above 69.03, then we can consider this market to reverse again back to this very wide range, trading range, which is located between 74.72 and 63.69. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.